Good morning, everyone. Thanks very much for staying on with us and joining the MINEX Central Asia, Central Europe, and Eastern Europe edition. We are now at the mining hotspot session, and I would pleased to introduce you to Richard Tolkien. He's the Managing Director of SRK Consulting. So the program we'll break the program into three different parts. First, we'll have two presentations from Nigel Robinson, CEO of Central Asia Metals, and Paul Cronin, Managing Director and CEO of Adriatic Metals. Then you will have an opportunity to ask questions. And then after that, we'll have three more presentations by Stefan Stoyev, Sir Richard Shrieff, and Milan Pariodic. And after that, we will turn into the Q&A and panel discussion mode. Richard, I'm turning off my microphone, and you're on. Thank you.
Thanks, Arthur. Welcome, everybody. From a slightly rainy Wales, after 2 months of sunshine, we've got a great group of people here, some based in the UK, some based in Austria, and we also have Paul Cronin dialing in from Serbia when he can get a good connection, but we'll see his presentation recorded anyway. If for those of you who didn't see the first session, and for those of you who did, it's extremely helpful in terms of setting the scene for what the future of mining might look like, not just post COVID pandemic, but also the impact of ESG and climate directives and things like that. So really putting everything into the mix for the future of mining in this particular region. So we're developing that theme much more deeply now. We're going to kick off with a producer, Central Asia Metals in North Macedonia, and an explorer developer in the region in Bosnia with Adriatic Metals, and then we'll move on to more regional issues specifically around the Central and Eastern Europe area. So we have so please develop the themes that were discussed this morning. We'll try and answer more questions. We've got two sets of questions. We've got Q&A for Nigel and Paul after their presentations, and then we've got a panel discussion after all the discussions where we'll all sit around the table and have a good thrash out of the current issues and what might be happening in the future. So I'll pass you now over to Nigel, who's going to give us a talk about Central Asia Metals and what they're currently doing in North Macedonia. So thanks, Nigel.
Okay, well, thank you very much, Richard. Hope everybody can hear me. Good morning to everybody. First of all, my name is Nigel Robinson. I'm the CEO of Central Asia Metals PLC, and we operate in, as Richard said, in North Macedonia and also Kazakhstan. Just looking as to how I actually move along the slides, if you don't mind. Just page down. Okay, as I said before, operating in, that's better. Sorry, I've got the screen now that shows me how I move the slides. So Central Asia Metals, we operate in Kazakhstan, population of about 18 million people there, where we run a SXEW plant producing pure copper cathode of the output of around 12.5 to 14,000 tons annually, with a life of mine out to 2034 in terms of the license. We also have a underground lead and zinc mine in North Macedonia called Sasa. We've owned this mine since the back end of 2017, and that produces around about 23 to 25,000 tons of zinc in concentrate, 29 to 32,000 tons of lead in concentrate. And the life of mine on that particular operation is out to 2038. Just a quick look back at our results for 2019, which I know for many of us on this particular platform may seem like an eternity ago, really, given everything that's happened in the resulting months, in the early months of 2020. But we had a good year in 2019. If you look at our production numbers there, we were ahead of target. We guided in the year 12.5 to 13,500 tons of copper, and we actually produced 13,771 tons. In lead and zinc, likewise, we produced 23,369 tons of zinc, which was well inside the guidance we gave for the year, and 29,201 tons of lead in concentrate, again within the guidance. Health and safety, good year on health and safety. We had one LTI on site, lost time injury. Obviously one is too many, but it was an improvement on the previous year. And our LTIFR, which is lost time injury frequency rates. How many incidents we have per million man hours across the group was down to a 0.42, given a significant reduction from 2018, where the number was 3.76. This strong performance on both sides, and with reasonable metal prices, albeit a reduction throughout 2019 and obviously further reductions in 2020 on the metal prices, we came in with a number of just shy of $181 million of revenue, generating $108.6 million of EBITDA. That's a margin of around about 60%, slightly down from 2018, but still a very respectable EBITDA margin. We do have debt on the balance sheet now, having acquired Sasa back in 2017, as I said. We're constantly reducing this debt on a monthly basis. It's a 5-year debt facility that we have with annual monthly amortization, and we pay back $3.2 million of that debt every single month, about $38 million per annum. And at the year end, that was looking at $108.8 million on the balance sheet of gross debt. Cash on the balance sheet around about the $34 million mark at the end of the year, and big focus at the back end of last year, and I'll talk more about it later, of building a sustainable business. And we'll also talk about COVID-19 as we go through this presentation. Just a little bit of a background to our achievements. We listed almost 10 years ago now. We raised $60 million to develop the Kounrad project, listing at 96 pence. And throughout the years, over the past decade almost, we've used our cash flows that we've generated at Kounrad to develop that project now to a facility with an annual guidance output of around about up to 14,000 tons of copper cathode. The success of Kounrad later on in 2017 enabled us to look at other opportunities. And as I've mentioned a couple of times now, we purchased the Sasa mine in Macedonia at the back end of 2017 for $402.5 million. Approximately half of it paid in debt, and the other half was equity issuance. And since then, we've been integrating Sasa into the business. And as at the end of last year, we'd paid back $176 million back to shareholders in dividends. That's about 98 pence per share. I don't think I'll labour this slide. Delivering value for shareholders, I think an EBITDA margin around the 60% mark, and also $176 million of dividends back to shareholders emphasises that we are a company that is there to deliver value for our shareholders and pay back the money that we generate from our low-cost operations. But on top of the shareholders that we're in business for, we recognise there's lots of other stakeholders in the business, and something we're particularly proud of, and something which we certainly took notice of throughout 2019, was an increased focus in the mining industry on sustainability and ESG. And throughout that year, what we did was we did a desktop materiality assessment of what's important to our stakeholders and our shareholders in terms of sustainability topics, and came up with 5 key pillars really that we focus on within the business. And as a result of that work, I've highlighted the 5 key pillars here. One thing we actually distributed for the first time in CAML's history was a sustainability report in April of this year. I think that's been well received by the shareholders from the feedback we've received so far. But it is a journey that we're going on. It's the first time we've delivered it. There's certain targets and certain metrics that we report within that report that we need to work on and improve upon as we go over the course of the next few years, really. But the 5 key pillars basically link to delivering value through stewardship, so strong corporate governance, both in London as a UK-listed PLC, but also overseas in North Macedonia and Kazakhstan, working closely with the governments to make sure that we have the license to operate. In terms of strengthening the team, we took on a new NED back in November last year, Dr. Gillian Davidson, who's got a lot of experience with tech resources in Canada and various other non-governmental organisations where she's been senior and focused on sustainability and ESG. And she'll be a great addition to the board in order to challenge the executive management team moving our business forward in sustainability areas. Maintaining health and safety. I've already mentioned our good track record on that, and our record 2019 with 1 LTI, down from 8 the previous year. Obviously, people are important. We now employ over 1,000 people at the CAML Group, and looking after those people, recruiting the right people, training and developing them, and making sure that they're motivated and incentivized to grow the business is a key aspect of what we do. Looking after the environment, we operate in challenging parts of the world, and I think we've got a good track record in terms of looking after the environment. The person you can see there in the middle of the picture is our CSR director, and he's been in situ since 2013, operating primarily overseas at Kounrad, and then moving over to Sasa when we acquired Sasa. And the focus of his work on site has been to ensure that we operate to the highest possible standards of sustainability in terms of the environment, local liaison with the community, and health and safety standards. And finally, but by no means last on this particular 5 pillars of sustainability, is unlocking value for communities. We commit 0.25% of our annual revenues, both at Sasa and Kounrad, to help out with the local communities. I'll just skip a few slides because they're all just emphasizing those points on sustainability. But if I now look at what we've done in the early part of this year in terms of helping the communities that we work with, clearly the key focus for us has been, as all businesses across the world, both in the mining sector and lots of other sectors, is managing with the COVID-19 and the pandemic that's hit the world. I'm pleased to say that we've managed to maintain our operations and production throughout, and as we went into the second quarter of this year and announced our full year results for 2019, it was a difficult decision for us as a board to actually have to state that we were not paying, for the first time in 8 years, a final dividend for 2019. And clearly that decision was born primarily of maintaining liquidity and preserving liquidity within the business. And our main concern at the time was that we would have to potentially close down one of our operations as a consequence of the pandemic, albeit through a force majeure with the smelter, or the fact that we couldn't ship the goods across the border. And as I said before, fortunately throughout this period, we've managed to maintain production, managed to maintain deliveries going across the borders, working closely with the governments, working with the workforce to maintain that we maintain their well-being on site. We've got no incidences of COVID-19 at either site or amongst our contractors, or indeed in the local towns in which we operate. And the last point on this is, as these countries move out of a very restrictive state of emergency they've both been in for the past few months, we are noting a slight uptick in some of the cases, both in Kazakhstan and North Macedonia. So we're remaining vigilant. I don't think we're out the worst of it yet, so we just need to maintain that vigilance throughout. And one last thing that we've done, which is vitally important, is working with the communities there. We spent over $200,000 in the past few weeks helping both in Macedonia and Kazakhstan. We've bought ventilators, PCR test machines, PPE, and contributed to the local efforts in North Macedonia with a central fund with the Ministry of Health. So showing that what we say we do in sustainability is proven on the ground in terms of helping the local community. I'll just skip a few more of these. This is just emphasizing really all those aspects of sustainability which are absolutely fundamental to the Camel Group. Just quickly moving on to operations, the Sasa zinc and lead mine in North Macedonia, 3 ore bodies at the mine, Svinja Reka, Kozja Reka and Golema Reka. We have a long life of that mine out to 2038, and it's a skarn hosted deposit with sub-level caving as the current method of operation, but we are reviewing that. And the ore is trucked to the surface, 30% of it, or it's hoisted to the surface through a shaft that runs through the Golema Reka ore body. Quick production update, 2019, we produced around about 820,000 tons of ore were fed through into the plants. We improved our zinc recovery and our lead recovery, and this year we're targeting an improvement up to 850,000 tons of ore to be mined, and our guidance for the metal is 23 to 25,000 tons of zinc in concentrate and 30 to 32,000 tons of lead in concentrate. We have made improvements since we acquired it. We've owned the mine now for two and a half years. In many ways, a lot of the improvements are low capex and just small marginal improvements to bring the mine into the 21st century. Things like internet underground, 3D computer software. We've looked at the age and the state of the fleet, the underground fleet, and we're renewing that over a 3-year program with 6 new units being delivered in the first quarter and the second quarter of this year. On-site laboratory has been modernized. Things like a new tertiary crusher to increase the throughput of the flotation plant to match the ore that's being mined up to a capacity of 850,000 tons. So small marginal improvements, alongside a larger long-term review that we're conducting to make sure that the way we mine the ore bodies is the most optimal way for mining those ore bodies. So we are looking at cut and fill, and in principle, a decision was taken by the board in December to move to cut and fill mining at the ore bodies. But that is now being going through a process of more detailed costings, both for capital costs, operating costs, and how we treat the tailings at Sasa, with the opportunity for potentially with cut and fill up to 40%, if not more, of the tailings being stored back underground by paste fill, and therefore put into the voids, and therefore avoiding the requirement to build tailings facilities on the surface. On the subject matter of tailings facilities, we have just finished at the back end of last year the construction of a new facility which will give us 6 to 7 years capacity, 6.5 million tons of tailings. It is a downstream tailings facility, and it's of a high standard of construction. We've had it reviewed by Golders. In fact, they're on site today reviewing that operation and the monitoring procedures we have in place, just to make sure that we operate to the highest possible standards in terms of managing a tailings facility on site. And finally, on Sasa, certainly by no means least, it's a profitable operation in the sense that it operates just on the cusp of the lowest quartile on the cash cost. You can see the numbers there that we've put for the audience in terms of Sasa C1 costs, operating at 47 cents per pound, slightly up from 2018 where we were 46 cents per pound, but a margin of 60%. And you can see the run of mine costs there for the run of mine ore that we mined, with unit costs per the run of mine ore of about $40.3 per ton. So very competitive mine, low cost, and a good operation. Just quickly moving on to Kounrad, which many of the audience may well know. This is not a traditional mine. It's an in situ dump leach project. There's an aerial photograph there of the site. You've got the open pit in the centre, the SXEW plant out to the eastern dumps, and we've got approximately 160,000 tonnes of recoverable copper still left in this project. Just a few charts to show performance. The main thing on the leaching side at the bottom there is the leach curve. You can see for each of the cells that we operate, we have a leach curve which shows how we recover the copper. And on the east, we recover up to 50% of the copper that's contained in the dumps. And on the west, it's anywhere between 35 to 42%. Longer leaching times in the west, up to 20 months, whereas in the east, it's about 8 to 9 months. Slightly different metallurgical characters across both eastern dumps and western dumps, but we've managed this throughout the years since 2012 when we started producing copper there, so we manage our way around the dumps and produce the up to 14,000 tons of pure copper cathode through the SXEW plant. You can see the top histogram there, which shows an increasing level of production. It is seasonal. We do produce more copper in the summer months. It gets down to -35, although we still produce in the winter months. It does get extremely cold and we can't quite produce as much copper as we can in the summer months. But it is a 365-day-a-year, 24/7 operation, very reliable in terms of the plant, up to 99% reliability, and a neat little operation. And importantly, a very low-cost operation in these times of difficulty with the market environments and COVID-19 impacts on the whole world's economy. Operating in the lowest quartile of the cost curve is significantly important for us. And you can see here the EBITDA margins at Kounrad, and also the cost per unit pound of copper produced. 37 cents to produce the pure cathode copper. And overall, with distribution and G&A, 52 cents per pound. That's about $1,100 per ton. And copper today is selling at around about $5,500 per ton. Getting towards the end of the presentation, those are the two operations then. So key focus on sustainability, key focus on low cost, long life operations. And what we do with the cash is very diligently look at how that capital is allocated back to shareholders in terms of paying dividends, 176 million, as I said before, back to shareholders, but also deleveraging the balance sheet. And the water flow chart you can see there, when we acquired Sasa, we took on debt of around about $194 million of debt. We're now down to $108.8 million as at the end of December 2019. And we've managed throughout this pandemic to maintain the repayments of that debt, even though we suspended the 2019 final dividend. We've still continued paying the $3.2 million per month right up to the end of May so far. And on that point, I think I've come to the end of my time approximately. So I'd like to thank you for your time. Just to re-emphasize, Camel, sustainable business, strong operational performance, low cost operation, low cost production, diversified now in 2 countries of operation, 3 metals that we produce. Good story for all 3 metals in many ways, different stories, but good stories for all those 3 metals, and a strong balance sheet. And our focus over the past few months has been to maintain that strong balance sheet to get through this current crisis and manage and preserve our cash balances and preserve our liquidity. And a key focus throughout that period to make sure we look after our staff and their welfare and make sure that they're all looked after during this crisis, and that we can maintain both employment and also the safety and well-being of them. And on that point, I think I'll hand back over to Richard and the host for the conference. And after the next presentation, I think I'll be open for any questions anybody may have. Thank you.
Thanks, Nigel. That's excellent, and it's great to see the evolving story of Central Asia Metals, and just all the great things that have been put in place and how things are developing. So no, fantastic. I guess we'll take questions once we've had Paul's presentation. So I guess we should move straight on. I think the MINEX people are going to bring that up.
Hello, my name is Paul Cronin from Adriatic Metals. I'm the Managing Director and CEO of the company. Adriatic is a UK-based mineral development and exploration company with assets in Bosnia and Herzegovina. We currently own the very high-grade Varesh polymetallic asset, polymetallic including gold, silver, lead, zinc, copper, and barite. And more recently, we have announced our intention to acquire Tethyan Resource Corp out of Canada, which owns the very prospective Raska district in southern Serbia, which also includes the Kizovac and Sistachi polymetallic assets. And we look to close that deal in August this year. Moving on, let me just tell you a little bit more about the history of Adriatic, where we have come from and where we intend to be moving to. As I mentioned earlier, Adriatic's focus is in Bosnia and Herzegovina. We own the Varesh polymetallic asset, which is about 50 kilometers north of Sarajevo. The Varesh assets were actually discovered right back in the 1960s. And had some limited exploration work that was done in the Yugoslav era. There was a mine built at the Vijevača site and a plant that was producing both lead, zinc, and barite concentrates. But that mine shut down in the late 1980s. But in parallel to that, there was also a very extensive exploration program being conducted in an area about 12 kilometers to the northwest of Vijevača called Ripica. Ripica had some drilling as well as some adits. The drilling was clearly starting to identify some economic mineralization, but had yet to discover the main ore body. When we acquired the projects in early 2017, we were able to come in and relatively easily move a drill rig into site and conduct confirmation drilling. As with most of the former operating projects in the Yugoslav area, there was often an extensive amount of very detailed, very accurate historical work, but a lot of the records and the physical drill core was no longer available. We had to go in there and do confirmation drilling, enabled to put a JORC compliant resource on those assets. And what we discovered when we started drilling was that in addition to economic grades of lead and zinc, there was also very robust grades of gold, silver, and copper, particularly in the Rupice asset. Since those early days in 2017 of starting up effectively a new company in Bosnia, building a team, creating a core shed, doing all of the things that you need to do to start an exploration program, we've been very successful in demonstrating the value of this asset. We've put together a fantastic team of very skilled people. We now have a workforce in Bosnia of around 50 people working on exploration, on engineering, as technicians, looking at environmental, social, and governance, as well as senior management in country, who ensure that all of the various programs of work that we're doing at the moment move together concurrently. Bosnia is a fantastic jurisdiction. It is in the heart of Europe, as you all are well aware. It neighbours, obviously, Serbia, where there is a lot of mining activity, but Bosnia has not had a lot of exploration work over the last 10 or 15 years, as there has been in Serbia. The simple reason for that is the Bosnian legal framework makes the barriers to entry for exploration quite high. Getting a mineral concession is quite a challenging process, involving multiple steps and being very expensive, requiring certainly in some areas, such as our canton, payments of about 500,000 euros per square kilometre for a mineral concession. Bosnia does have an established mining industry. It has a lot of coal mines. It also has some very good polymetallic mines owned by MINEX, a private company in the UK. It has a jurisdiction that is attractive to foreign investment. It is a very business-friendly environment. The tax rates are low, favourable royalty regimes. You have a very supportive government who are always trying to help foreign investors navigate their laws and understand how things can be done in that jurisdiction. And we've personally found it a fantastic place to work, far better than many other jurisdictions that I've worked in across the world. In neighbouring Serbia, obviously the mining code was reformed in the last few years. It also has very favourable tax and royalties, and is again another very politically stable jurisdiction, which is attracting some significant investment from the likes of companies like Rio Tinto, Dundee Precious Metals, Zinjan Mining, Mandora, and many others. The Rupice deposit north of Varish is quite extraordinary. When we acquired that exploration license in 2017, there were about 54 historical drill holes. Most of them had not intercepted mineralization, but there were some that had started to intercept mineralization. When we first went in and drilled there back in early or mid 2017, our first drill hole intercepted over 64 meters of high-grade massive sulfides with a gold equivalent grade of around 21 grams per tonne. Since then, we've drilled well over another 130 holes into the deposit, and mid last year to find our maiden resource, and it won't be our last resource, but it is our maiden resource of 9.4 million tonnes, grading at about 10 grams a tonne gold equivalent, but it is a truly polymetallic deposit with economic grades of each of the metals that are included in that deposit. It is structurally complex. However, we're starting to understand the deposit very well, and our recent drilling has been quite successful. We've extended the deposit strike length by 150 meters, both to the north and south, and we're continuing to step out to the north and south, as well as to the east, where late last year we discovered a new area of mineralization. We've also done extensive soil geochemistry. We've done extensive geophysics, and that is really defining our current exploration today. Also late last year, we started to put a scoping study on the project. That scoping study indicated that the project had some pretty captivating economics. For upfront capital of less than 180 million US dollars, it returns an NPV at a discount rate of 8%, of a little over 900 million US dollars, and an internal rate of return of 107%. The project has been designed in a way that maximizes the value out of both the Veovaca deposit and the Ripitsa deposit. As you can see from the graph here on the left-hand side of the screen, it has got very substantial upfront free cash flows, which justify the very rapid payback period of around 8 months. The mine plan has been designed to access the highest grade ore first, and continuing test work on that high grade ore indicates that it does float very quickly, that it can be done to a coarser grind. And as we work through our pre-feasibility study, you'll see some results coming out in September this year that we think will be very enticing in terms of the way we're trying to optimize this project and maximize its value. But we still have a lot of work to do on exploration growth. In December last year, we drilled a hole 4319. 4319 was our most easterly hole to date in an area where we were actually testing to show that the deposit had closed out. But to our surprise, at depth, we hit a very nice 16-meter intercept of particularly high-grade precious metals, but also very robust base metals. And we've continued to drill to the south of the deposit, again, hitting very good precious metals with 4.37 grams a ton of gold and 406 grams a ton of silver. But in addition to that, high-grade zinc, lead, copper, and barite. And over the remainder of this year, we'll be continuing to look at how we expand that known area of mineralization. And the expansion is really directed in an area to the southeast of the deposit called Jurassic Breastic. Jurassic was previously an area of exploration focus in the 1980s and 90s. Substantial adits had been drilled out there. We tested some grab samples from the adit dumps that were heavily mineralized, and we've commenced a drilling program there. In addition, directly to the south of Ripitsa, we are about to start drilling on a project that we call Botovica. Botovica, again, we have done extensive soils and geophysics. We have analyzed historical data that was made available to us, and we will be commencing a drill program there within a few weeks. The strategy for the company, however, is not just about Ripitsa. Ripitsa is a tier 1 asset. It will have a long mine life. It will generate substantial cash flows. Economically, it is a very robust project in that it generates huge free cash flows that can be used to expand Adriatic's footprint throughout the Balkans, and our focus is the Balkans. The other advantage of Ripitsa is that it has no tailings. There is so much mineralization in the deposit itself that we're actually short of waste rock to backfill the project and mine out all of the stopes. Veovaca will be key in terms of how we manage that backfill by essentially mining Veovaca or parts of Veovaca early in the process to be able to generate waste rock for Ripitsa. But in terms of our strategy for the company, the recently announced acquisition of Tethyan Resources is the first step in that, where we intend to demonstrate our credentials as a multi-mine developer, so that the cash flows, as they start to slow down from the Vares project, can be augmented or supplemented from the cash flows at Kizilbash and Sistaci. This is an historical project, a bit like what Ripitsa and Veovaca were to us 3 years ago. I understand that Tethyan will commence drilling on this project in early June, and that we should see a steady flow of results coming out of that project over the next several months. In terms of the timeline, we've obviously been very busy on exploration, but we've also been doing a lot of work on metallurgy. We've been doing work in our ESIA, our pre-feasibility study. We expect to complete the pre-feasibility study in September this year, and we'll immediately kick off the definitive feasibility study, which is expected to be completed in Q1. Whilst all of that's going on, we're going to continue our exploration efforts, and once we close Kizivak, Tethyan rather, will extend the drill program there, and we'll look to extend that resource and build up quite a substantial global resource in country. From a permitting perspective, we've been making fantastic progress. Just this week, we announced we've received our environmental permit for the Veovacha project. We have submitted our application for environmental clearance on the Rupitsa project, and we expect all of those exploitation permits to be issued Veovacha initially in likely July, and then Rupitsa toward the end of the year, which will enable us to basically take the project forward on a very aggressive timeframe. We also have a very strong social and community responsibility program in country that has been involved in a number of initiatives. We're starting to build a strong social license, particularly in our canton and our municipality, and we'll be continuing to formalize the structures around that and continuing to work with our local community to deliver the benefits of this project. Our management team is very robust, led by Peter Bilby, our chairman, but we also have a very experienced board and management team who are capable of delivering projects like this in multiple jurisdictions. And we're excited to have Fabian Baker joining us from Tethyan in a corporate development role once that acquisition completes. From a corporate perspective, the company has done relatively well. As you can see from the graph, we have been impacted by the current COVID crisis, but we've got the balance sheet to be able to do what we need to do. We've always had very supportive shareholders. Management still has a substantial stake in the company, and we've been able to reduce our cost of capital over time as we've tried to progress the project, and we'll continue to do that over the next couple of years. So thank you very much for your time today. And if you do have any questions, feel free to contact me. Thank you.
Thanks, Paul, in your virtual space. Unfortunately, it seems that Paul can't get a connection to this to the room. He's going to try and get hold of us. We're going to try and get hold of him a bit later in 12:30-ish, I think. So what we'll do is, I guess, if we've got any questions for Nigel specifically, I think the reason for this break now is to really just focus on our operating company in the region and our exploration company in the region, and to see whether people had any specific issues they wanted to discuss. Then we get on with the other presentations with Stefan and Milan and Richard. Actually, Paul will join us at 12, so you get the live kind of warts and all interactive process that goes on here. I'm getting all these messages. I feel like I'm some kind of presenter on live TV. So I'm getting the stuff in the right-hand corner saying that Paul will join the panel discussion at 12. So let us see if there are any questions for Nigel. I still need them to, Arthur, you still need to give me the list of the chat questions. Well, I guess if we don't, we've got a few questions that have come up specifically for this area, and Nigel, I guess, you've explained very clearly what type of things are going on in North Macedonia with relation to Sassamine in particular, I guess, dealing with Europe. We're talking a lot about second waves and potential issues. Do you have a sort of strategy going forward to that if you do have a second wave, if it does impact your workforce, if there is an economic recession, given that you're a base metal producer, with obviously some precious metals in there, but maybe you could expand a bit on that.
Yeah, by all means. Yeah, I'm happy to talk a little bit more about that. I mean, in terms of strategy, I think if you think about the whole strategy of the Camel Group, really, we've always been focused on low-cost operations, and that strategy bears fruit when we're going through what we're currently going through. We have no control whatsoever over what's happening in the economy and the impact that's having on metal prices. So being in the lowest quartile for us gives us that degree of comfort, and clearly having a strong balance sheet also gives us a bit more comfort. And the whole thinking behind not paying that final dividend, which was a fairly arduous decision, but became easier as the month of March progressed, and it became obvious that the whole world was going into lockdown and that it was a really serious crisis we were facing, and potentially in our own areas of operation we may, as I said before, have to go into care and maintenance for an unknown period of time, and thereby generate no revenue with a cost base and a burn rate that we'd analysed and and reviewed and became concerned about if it went on for, say, more than 3 months. So the strategy was really, the strategy long term has always been low cost operations and strong balance sheet and very prudent management. To address this particular crisis financially, the strategy was to preserve liquidity. So we didn't pay the final dividend. We will review dividends. We have no intention of cancelling dividends in the future. The intention was very much to address this unique set of circumstances and manage the balance sheet and preserve liquidity and get through it in the short term. Obviously, once we come out of there and get a bit more clarity as to what the future holds, we'll review what dividends to pay and what is prudent in light of the cash flows and how we've managed over the difficult period. So that informs us very much in that sense. What we've also done is tightened up quite significantly on our capital expenditure and operating expenditure, improved our what you call delegation of authority, such that all expenditure for capital on site has to come through either myself or Gavin Farrar, who's my CFO. That might seem a little bit excessive in some ways, but it's the right thing to do so you don't waste any of that hard-earned cash, really. And the other aspect of the strategy was just monitor it on a day-to-day basis to maintain the production, maintain the deliveries. Now, as I said before, we have managed to do that throughout this period, but we do remain vigilant. The point about a second spike, which everybody talks about, is just as much a threat as it was in March and April. So all the procedures are in place at site for better hygiene, better social distancing, slight changes in the way we manage the canteen, the buses, the number of staff that are actually on site at any one time. We've had to work closely with the governments to make sure that we have the permits to get the goods over the borders. And also in places like Macedonia, for example, they have just come out of the state of emergency. Sorry, they're still just in the state of emergency, but they are slowly but surely, easing some of the restrictions. And one of those restrictions was a overnight curfew, and we had to get specific dispensation to get our night shift workers to be able to go from their homes onto the mine to maintain operations. So it's a strategy of vigilance to look after the staff and maintain the production on site, and financially, it's a strategy of really preserving liquidity, and that's the same in both countries of operations. They're slightly different, obviously, but the management team have probably got similar kind of procedures on site that have served us well so far.
And in terms of, obviously Kazakhstan's a big country, and
yeah,
internal, you've got internal links, things like that. But in Macedonia, you're reliant on your supply chains from presumably out of the country for significant consumables and materials. Has that been affected in any way?
No, we've that's been part of the kind of on-site business continuity procedures of the local management team to assess what critical reagents have we got on site. We did stock up right at the beginning of it, so we've got maximum inventory on site, and got in touch and had close relationships with the key suppliers. So far, again, we haven't witnessed any kind of interruptions to those supply chains, and so that's not been an issue for us as such, both in Kazakhstan or in North Macedonia. So I think it's a question of just recognizing the risks and just, you know, assessing those risks and talking to people and keeping relationships going as best you can. I mean, the risks has changed, as you can imagine, Richard, throughout the period. The initial concern we have was maybe that the governments would impose a lockdown like they have done, you know, of all businesses, like they have done in some South American countries. Fortunately, our management team in both countries have been able to work closely with the government, and the government hasn't taken that view. They've, in many ways, supported us and wanted us to continue the operations because of the impact it might have on the livelihoods and the tax take of in the local economy. So that's been one aspect. We had no control over what, say, there's the lead and zinc concentrate and the impact maybe on the smelters causing, which was a key concern in the early stages, because most of Western Europe had closed down, and we send our zinc and lead concentrates over to Bulgaria and Poland. So if they'd have had a problem selling the refined product into the Western European markets, they could have called force majeure. So that was a risk, and that doesn't seem to have come to pass so far, touch wood. We've kept in close relationships with them. And the final one, obviously, is the impact of the disease being amongst the workforce of the community, and that's down to stronger hygiene procedures, as I said before, and social distancing. So there's been different risks at different times, which you have to manage on a day-to-day basis. And as I keep emphasizing to both my own workforce and as I have on this presentation, really, we have to remain vigilant. We are not through this, and we have seen a slight uptick in number of cases in both Kazakhstan and Macedonia as they've eased the restrictions, and that's a slight concern we have at the moment. So so far so good, but still a long way to go, I think, as the whole world recognizes, Richard.
Yeah, good. All right. Thanks, Nigel. Well, look, I think again, when we get the panel discussion after the next round of speakers, we can develop these themes more.
Sure. Yeah.
Which will be very helpful. Your perspective as an actual operator in the region is extremely helpful. So we're going to move on now to the remainder of our presentations. We've got Stefan up next. Stefan Stoyev, who's the CEO of the MINEX group based in Vienna. They're a relatively recent group of explorers and consultants and developers who have a very good perspective on the region. And Stefan's now going to give us a talk on his feeling for how things will affect this particular region over the coming months and years. So, are you ready there, Stefan?
Yes, I hope we have some visual already. So, warm good morning and actually good afternoon from Viennese time point of view. It's a pleasure to be here, and allow me also to express my gratitude to Artur and to Irina for making this possible to be part in this forum today. So I really enjoyed very much all the perspectives that were shared in the first panel and also now in this discussion. I couldn't agree more on that, and I would like just to add one more dimension, which is, of course, including our perspective into the scene, and also as a practitioner, just to give you also a little bit of insights what from our point of view is happening now really in the field during this COVID pandemic time, and where we see actually the next wave coming in. First of all, really, in the first session, it was a very good combination to have the European view and also the Canadian view, and this is because I think Europe has a lot of things to learn in terms of mining exploration, especially exploration from Canada in this aspect. And I was keen also to hear it from Mr. Sadowski, who said that actually now our challenge is actually the supply chain security, because actually the supply chain security in MINEX starts in a greenfield project. And this is where we have most of the struggle in Europe. I think we have excellent brains and perfectly educated and very, very highly skilled experts from the geology to the metallurgy to everything. And also technology in Europe is worldwide highly accredited. But in Europe itself, we are still, I think we are in the baby steps of what actually mining should be in other continents as well as we know it. That's why I think the combination and the input also with our friends from Canada is very, very valuable. I was also actually eager to say that actually I was very intrigued to hear also from Paul and also from Nigel how they approach this projects in Macedonia and also in Bosnia and so on, because these are projects which we also aware of, and we know them from the very beginning, how they developed through all the issues that were there. And what I can say in summary, I think now, I mean, we always hear the wake-up call and the wake-up call when a major event occurs. I mean, in the year 2020, there was a price decline in the mining industry. We had it as a wake-up call for efficiency. Today, the pandemic is also not a wake-up call. But at the same time, I mean, I don't know how many wake-up calls we need really to get them really implemented in our daily operations. And what I mean in very concrete by that is that in the mining industry, I mean, the framework is clear. The mining, to start a mine is a very expensive approach. And of course, a mining project is a long-term project. So when we take the keywords of responsibility and sustainability into it, it means that we have to implement it from the very beginning on. And it starts with the fundraising on the greenfield and so on. And I think what I have the feeling that now really Europe has learned a lesson also in this aspect, because it's really realized in this pandemic how serious the dependency is in the securing exactly the value chain in materials. And I strongly believe that actually the Balkan metallurgical belt is the key now for Europe really to take this lesson and really to enforce it and to work together with the companies which are there in a more intense way, because of course at some point the access to the mineral comes in a step, and this I think everyone who is in industry can talk this by heart, and the later phase where already so many resources and struggle. Sometimes it gets exhausted in the primary phase, but then everyone wants to be part of the cake. So what I would like to say with this, that we should find a way also from the Europe perspective, how to enter the kitchen, where we actually, even before the kitchen, to go to the mill, make the grain and all these little things, which I think were not treated with the priority until now that it actually deserves. And so what I would like to put here very clear, I think, from the situation now from the pandemic, what we have monitored here closely is, of course, there is a huge fluctuation on the markets at the moment. So it's impacting the entire value chain. And of course, we have on the mining sector, we have a direct and indirect impact very strongly. So the direct impact, of course, the miners have to work and they have to go to and operate the mines. And it means actually, here we have the open pits, which are a little bit easier actually and complying with the rules that we had to achieve in order to overcome this pandemic contagious phase. And of course, underground mining was completely blocked, and of course, this outcome is going to have an impact in the future, definitely. On the other hand, we have also the indirect impact, which certain minerals which were less consumed because of the market was not there, it was blocked in the production, so were stockpiling. So the prices went down. So this is now, I think, the speculation mode, which has to be taken a little bit more consistent policy. And this is actually my also appeal to Mr. Sadkowski, so just to find a way how together to make this, if it has to be sustainable, it needs to be long-term, and we need not to have this heart attack bouncing up and down. It has to be avoided in order, as actually just Nigel and also Paul just put their focus on the shareholders. And of course, the shareholders are the pioneers who are supporting this project in an uncertain phase, which of course deserves to have a clear recognition and a payback and so on. But at the moment, and of course, the operation of the mine remains on the long-term capital. And then at some point, actually, it's a little bit disbalancing between the interests of the shareholders and then actually the sustainability and what needs to be invested in the mine to make it more sustainable. So, long story short, these are actually the components that we're dealing now very, very intensively in Vienna and in MINEX. And of course, we are very closely working together with the Montana University in Dublin. This was actually one of the showed in one of the slides from Mr. Sadkowski previously, to ensure that we will have the right brand power, the right skills, and the right technology at the right time and the right phase of a project, just really to make it sustainable. Because sustainability is built on layers, and so we have to make a really solid fundament and platform in order to build it up and so on. But if we, of course, at the other end, we have the obligation to the shareholders who would like, of course, to see their value coming in and to have dividends, as it was addressed before. So this means that we have to run sustainable, but also very fast. And this is sometimes a little bit contradicting. And these are actually key parameters which we are trying to also to find pillars from the financial aspect and also from the operational side, how to make them more sustainable again, and how to make them really making the project in a fashioned way, not to be then overshadowed by ecological issues and whatever else, which is actually also following up. So coming back to the Balkans, I think there is a lot of resources, and a few of them were addressed before. And there is much more than this also in the entire region, which I believe should be combined in a really an international, European, maybe Canadian task force to have exchange here the best practices and also to work together to see how not to bring all, because there are so many opportunities. And at some point, this competition, which is now running between companies, is just unnecessary in my point of view. That there are actually options how to bring value together and not just to run until the acquisition of a project is done and then to see how to isolate it from different aspects. So this is basically in a nutshell the concept that we are now trying to follow. And of course, what the from the experience is told, and thank you very much for the short interpretation and actually introduction, but allow me just to say a few words about MINEX Austria itself. So we have decided to build this exactly based on the European agenda of sustainability in 2018 to bring out actually this task force group and to develop all this direction that I briefly mentioned. And at the same time, we are also building actually our knowledge on over 40 years of experience, which is bundled by all the success in Central Europe, Central European mining. And we have also in the past a history from the 1990s, which is growing in a successful way, showing a very successful cooperation between Central Europe, basically Austria, and also the opening resources in Eastern Europe back then, which was something which was had to switch from the state regulations to a private economy. I think these are all lessons that were learned, and they were really in the knowledge and in the methodology of our company, just to make sure that we are going to take all this abilities that we have collected over the time and really can follow up together with other companies and in alliances to make this projects there where they expect it to be from the shareholders' perspective, but also from the national perspective in terms of sustainability and so on. I think I will stop for a moment here, and I hope to have bring more into discussion in order just to keep it on the timeline that we already crossed. Thank you very much.
Thanks, Stefan. That's was really helpful. I think it was sort of developing the themes that we'll have a very good discussion in the panel discussion coming up about, you know, how we actually develop Eastern Europe to its full potential, as we saw in Paul's presentation about the how productive this area potentially can be. So yes, thanks again. And next up, we have Sir Richard Sheriff, who's a partner of managing partner of Strategia Worldwide. He's going to talk about leadership in crisis, which again is broadening this subject to really focus our minds on you know, what's going to happen next and how we plan some of the things that Nigel talked about in terms of the plans that they put in place for the company and focusing on certain things and all the what ifs that everybody is asking themselves at the moment about how do we deal with now and how do we deal with the future and what will the future bring. So Richard, please go ahead, and I'll hand you over. Thanks very much.
Richard, thank you very much, and good morning to you all. It's a pleasure to be with you, albeit only virtually. And particular thanks to Arthur and Irina for setting up this event. Well, as Richard said, I'm going to switch tack. I'm going to talk about leadership in crisis, because if anything has had the spotlight shone on it during the current crisis, it is leadership. And of course, it's leadership and particularly strategic leadership, which is going to set the conditions for successful emergence from this pandemic and indeed the potential economic collapse which should indeed follow. Now, we're all prisoners of our experience. As Richard said, I'm a partner of Strategia Worldwide, which is a risk management consultancy. But my understanding of leadership in crisis is based on 37 years as a soldier. So I'm afraid you're going to get the undiluted view of a veteran on this. A career in which I commanded on operations or in combat at every level, from junior command of a platoon, which is around 30 men, to a division of about 25,000 men and women. Operations ranged from Northern Ireland, combat as a tank squadron leader in the first Gulf War, Bosnia, Kosovo, Iraq, 2006 and 7, which was very definitely a combat operation. And in my last job as NATO's Deputy Strategic Commander, Afghanistan, as a member of the Strategic Command Group overseeing the NATO operation. Now, the one unifying factor in this experience is that the need for resilience in crisis underpinned everything. And resilience is the foundation which allows leadership, styles and strategy to be adapted for the virtual world we're so dependent on now. I start with the premise that the best way to manage crises is to avoid them. Hence the essence of the military approach to crisis management: prevent rather than react. However, on the basis that it's part of the human condition to be caught by the unexpected, the next best thing is to ensure that an ability to respond to the unexpected is built into every aspect of the organization. And as with everything, it starts with selecting the right leader. And that means someone who can inspire people to do willingly and well what needs to be done. Don't assume that an ability to lead people comes with a job. You can't parachute someone who has no experience of leadership into a leadership role and expect them to succeed. Leaders have to be selected, and they have to be educated and trained to become leaders. No one goes through the gates of RMAS Sandhurst, which is the British Army's Officer Training Academy, but without being subjected to a rigorous process of selection to really test their leadership potential. And thereafter, at every level, leadership ability is tested, judged, and built up through extensive training and education. You don't command at a high level until you've proved yourself as a commander at a subordinate level. So what? Well, invest in leadership, select, train, and educate your leaders for the future. Now, I'm not suggesting your organizations should emulate the army, but it is worth recognizing that the reason as an institution it generally gets leadership right is because of the ethos of leadership, which underpins command and the immense amount of time, effort, resources that go into selecting, training, and educating leaders right through their careers. Let me highlight a number of areas I think underpin leadership, and therefore the ability to respond in a crisis. First, character. Leadership is about who you are and what you are. It's therefore intensely personal, and because we're all different, we all do it differently. You'll all have your own list of leadership virtues, but let me list 3. For me, courage comes first, because as Churchill said, it is the quality which guarantees all others. Courage defines leadership. In my old world as a soldier, physical courage is the knightly virtue to which we all aspire, and rightly we expect physical courage from our officers, the courage to take action and lead by example when circumstances demand it. Leadership by example is in so many ways the absolute essence of leadership. But there's also moral courage, the courage to make and stick with difficult decisions, and that applies in any sector. Next comes integrity. You'll know from your own experience that few things undermine leadership more than bullshit, spin, or failure to be straight. The last characteristic I'll touch on is robustness, both physical and mental. Mental robustness is all about the determination to think clearly under pressure. It's about making things happen by sheer force of will. It's also about coping with things going wrong and starting again. Don't underestimate physical robustness either. Fitness is fundamental and allows you to operate under pressure. Recognize, too, the effect on others of a dependable, strong physical presence that emanates confidence, even if it's a virtual presence. Next, morale. As Napoleon said, the moral is to the physical as 3 is to 1. If morale is high, people lead themselves. They have the resilience to cope when things go wrong. Leaders have to build, maintain, and nurture good morale. And there are three aspects to this. First, spiritual, not in a religious sense, but in the sense of a great and noble purpose, the achievement of which is vital. People must feel that what they do contributes to achieving the purpose. I think mining could do much more here and shouldn't be shy about proclaiming that our civilization, our prosperity, our way of life depends on mining. More than that, mining is critical to finding the alternative sources of energy, which will allow us to respond to that other great existential threat we face of climate change. Next is intellectual. People must believe the purpose is achievable, and they have the necessary capability and resources. They must also feel they belong to an efficient organization. Material is the last of the three. People must believe that their leaders are doing what they can to ensure they're looked after as well as possible. Equipment, working conditions, a fair deal on pay and terms of service. That doesn't mean luxury or perfection. Indeed, sometimes the highest morale can be found where conditions are toughest, because people take pride in putting up with challenge. However, it does mean getting the logistics as right as possible. Fundamental to maintaining morale is the culture of the team, because it's the team which generates cohesion and gives people the motivation to succeed and the mutual support they need. In a crisis, it is the extent to which your people feel they belong to a band of brothers and sisters which will get you through the challenges you face. Then there's the importance of communication. Leadership needs the ability to connect with people, to communicate, and you can only connect if you understand your people, their needs, their fears, and can reassure them through the power of your personality that you have their interests at heart. It's about EQ, not IQ. And this means talking in a way they'll understand and which resonates. You need to know what you're talking about, and you need to mean what you say. So communication in crisis requires calm reassurance, realism, and a positive approach that gives people the confidence that things will turn out okay. The fundamentals of leadership don't change. What does change is circumstances and the world and the society we live in. That means understanding, taking account of different expectations, and adapting to circumstances. I want to switch tack now and talk about rethinking strategy, not only for the current crisis, but to set the conditions for successful emergence from this pandemic. Never in most of our lifetimes has strategic leadership been so much in the spotlight as our political leadership grapple with decisions over lifting lockdown, risking lives, and how to save an economy in freefall. Now is not the time to second guess our politicians, but to recognize that to govern is to decide. Suffice it to say that simple rules or principles of leadership and templates of decision-making do not necessarily serve one well in complex situations where there are no right answers, just limited choices between the least wrong ones. So clarity of thought, vision, and adaptability exemplify the strategic leader as much as resolution and determination, an ability to live with ambiguity and uncertainty, and not least a pragmatic capacity to take calculated risk for the longer term and greater benefit. These distinguish the successful strategic leader from the tactical operator or manager. Fundamentally, successful emergence from this pandemic will be about being successful on two counts: strategy, how to win a war; tactics, how to win a battle. And the words of the Chinese strategist Sun Tzu, written around 550 BC, are equally relevant to any strategy designer, whether in politics, business, or the military. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. Strategy design is, I suggest, best served by thinking right to left. Start with an analysis of the situation. Where are we now? What are the risks and challenges? What is the center of gravity or source of strength we want to protect? And what the destination? Where do we want to get to? Identify and articulate the desired set of circumstances or vision we aspire to. What objectives need to be achieved if that vision is to be unblocked? And what are the decisive conditions that need to be established to allow progress along the lines of operations or routes to each objective. What action and resources need to be applied to generate the outcomes if those decisive effects are to be achieved. Finally, constantly be asking how circumstances are changing and how the plan needs to adapt. Now, that is a very simplistic overview. It is, of course, much more complicated than I've portrayed. But put together, thinking like this allows you to build up the strategic pathway from which you can put together the detailed plans to achieve your desired set of circumstances. But important as planning is, don't be fixated on the plan. In order to build resilience against future crises, stay agile, stay adaptable. It was Eisenhower who said it was planning that mattered, not the plan. And another general, the Prussian von Moltke, who said that no plan survives contact with the enemy. And I bet boxer Mike Tyson has never heard of von Moltke, but he pretty much said the same thing with his line, that everyone has a plan until they get punched in the mouth. It's planning and persistent reassessment of the external forces at work, which gives you the knowledge and understanding from which intuition flows, and which allows you to adjust the plan when you get punched in the mouth. The more you understand, the greater the agility of decision-making. This is where wargaming comes in. No military commander would launch an operation assuming there's time without wargaming the plan against a red team to determine the friction points or risks and where the crisis might strike. Always asking difficult what-if questions. Rigorous wargaming will help you identify where this might happen so you can put together the necessary contingency plans to prevent the worst happening and ensure you have the means to respond when, as it invariably will, the crisis strikes. Because it's all about developing the intellectual muscle memory which kicks in when needed. But to respond effectively and really ensure resilience, you need drills and standard operating procedures to ensure that people take action quickly and, if necessary, without orders. But these are no good unless they're regularly practiced and tested. Let me give you an example. We've been working with a mining company who asked us to rework their security and crisis management policies and procedures. And one of our recommendations, which they didn't accept, was the importance of wargaming and practicing the plans. When the COVID crisis struck, not only did they not implement the procedures, but the general manager froze, retreated to his office, refused to communicate directly with his people. Effectively, in the middle of a battle, he hid at the bottom of his trench. On top of that, the company headquarters in a different country had to put up with that leader's behavior. And there's now a real risk that one bad apple can ruin the very good reputation that company has. I'd identify 3 lessons from this. Number 1, select the right people, test them, and if they don't measure up, be prepared to move them. Make sure you have a robust succession plan is the second lesson. Nominate competent deputies in advance. Leaders may well fall by the wayside, as we saw with Boris Johnson. So empowered deputies are critical to resilience and effective crisis management. Third, test your crisis management drills and procedures so that implementing them is second nature when the crisis strikes. Successful response to a crisis and resilience depends on what the military called mission command, by which subordinates must be empowered, supported, resourced, but they must also be accountable. And this means trusting your people on the ground to use their initiative. They must understand the intent and be crystal clear about what is to be achieved, and they must have the resources and support. But this trust, and trust takes time to build. In the military world, it comes partly from living, working, training, thinking, and conducting operations and fighting together. But it also comes from competence and the confidence that people have in an individual's ability to lead. And this is based on experience, training, education, and thinking, always underpinned by character and flair. Finally, keep something in reserve. Drilled into every military commander at every stage of his or her training and education is the importance of a reserve. If the reserve is committed, generate another one, however difficult and however small. You know best what sort of reserve you may need to deploy to manage a crisis. And if you want an example of what happens if you don't maintain a reserve, look at the chaos we saw in this country over adequate PPE for our health workers. For the last word, let me turn to an extraordinary book by an extraordinary man, 7 Pillars of Wisdom by T.E. Lawrence. He was a man with no formal military training. He was an explorer, a historian, an archaeologist, and a desert traveler of remarkable endurance. And he led the Arabs during their revolt against the Ottoman Turks in the First World War. And you'll all remember Peter O'Toole's portrayal of him in that classic David Lean film, Lawrence of Arabia. What he said about generalship nails leadership in crisis, and I quote, "The greatest commander of men was he whose intuitions most nearly happened. 9/10 of tactics was certain enough to be teachable in schools, but the irrational 10th was like a kingfisher flashing across the pool, and in it lay the test of generals. It could be ensured only by instinct, thought practicing the stroke, until at the crisis it came naturally, a reflex. Of course, the best way to manage a crisis is to prevent it. But when it comes to the crisis, as it surely will and has done, only through thought practicing the stroke, training for certainty, and educating for the inevitable uncertainty, will Lawrence's, will Lawrence's irrational 10th flash across the pool like a kingfisher. At the end of the day, crisis management is about building resilience through planning, wargaming, training, educating, and keeping something in reserve. But it is always about leadership. Thank you very much for listening to me.
That's really helpful and very wise words there. And I think, you know, everybody who is attending the conference today will be struggling with a lot of the things that you've discussed around how to make decisions, what we should have done, what we should do, and I think, yeah, it's absolutely critical. And I guess this is probably the only time we've ever done this in the sort of conditions that you've been talking to us about over the years, to say you must plan and things like that. So yes, so very, very helpful and very encouraging. But we'll get onto that in the panel discussion. Thank you, Richard. And last up now for our presenters is Dr. Milan Parevidic. I think you're based in over there in Belgrade, and he's going to now give us a very focused perspective on the mining law and mineral exploration in Serbia. You know, what you need to do for explorers, for producers, and some of the pitfalls and some of the twists and turns. So Milan, take it away, and once Milan's finished his presentation, we'll get on to our panel discussion. So thanks a lot.
Thank you, Richard, very much. And I want to thank Arthur and Irina for organizing this wonderful conference, and to you, Richard, and to all the co-panelists for this very eventful morning and afternoon. So good morning or good afternoon, everybody. We're going to talk about mineral exploration and mining in Serbia from a government policy and legal perspective, but we'll look also first at the factual situation. Why has Serbia become such a hotspot in the last, I would say, 5-6 years for mining? In that sense, let's first start with the figures. Currently in Serbia, which is a small country of some 80,000 square kilometers, there are 140 active exploration fields, of which many have close to 100 square kilometers. There are 103 fields exploring metals. 17 companies are active in geological exploration, of which 30 companies are coming from abroad. And we have a big number of companies operating in Serbia coming from foreign countries, from juniors to majors. And that is increasing, basically. We have Rio Tinto, we have Freeport, which has made the discovery of copper. Before that, Rio Tinto made the discovery of lithium and borates. There is Dundee Precious Metals. There was Eldorado Gold. There is a number of juniors very successful like Mundoro, who are also operating very effectively and bringing other majors into the country. And the level of investment into exploration in Serbia has dramatically increased, actually have quadrupled from 2012, when it was only 24 million, the annual exploration budget in Serbia. It has risen to 100 million, and probably now it's even more than 100 million in 2019. It was 100 million in 2018. The Chinese have actually started developing a copper mine on Čukaru Peki, which was the Freeport discovery. They bought it out completely, the upper zone and the lower zone. And in 2019, they should have invested 500 million. I expect that Zijin will be actually investing more than 500 million in year 2020, with an idea to open a new copper mine, and to expand the operations of the old historic RTB Bor mine. So there will be major increase of copper production in Serbia from 2021-22 approximately. Why has Serbia become so attractive? First of all, it has the resources, obviously, quite abundant from the Tethyan Belt and other. It's interesting now, there were some metaphors like Serbia is Saudi Arabia for lithium. Then there is, of course, lots of copper and gold, zinc and lead and other metals and non-metal also ores. The very important aspect is the really frank and consistent support of the Serbian government in developing exploration, in doing exploration generally, and trying to convert. Their ambition, of course, is to try to convert those operations into mining as soon as possible. Then also, it seems that a major contribution to the attractiveness of Serbia is the introduction of the mining law of 2015. I have personally intensely worked on drafting that law, and basically converting that law from a state investment law from the time of communism into a true mining investment law, with all the guarantees, not all, but most of the guarantees needed for a very advanced mining law in terms of an automatic conversion from the stage of exploration into mining, automatic naturally under the conditions of the law. You have the right to convert from exploration into mining, provided that you prove that you have reserves. Then the social license to operate has never been an issue in Serbia. It having a long-standing for ages of mining from the 14th, 15th century, but really modern mining started at the beginning of the 20th century and has never stopped since then. So there is a lot of experience and a lot of local expertise. From the level of the simple workers and the contractors, the drillers, to the level of the top-level geologists who really are able to find world-class deposits and make a fundamental contribution even to the operations of the majors in Serbia. So we have a very good workforce, very good engineers, and also very good contractors, all kinds of contractors, institutes, drillers, everything that you need. Then, given the size of the country, which is quite small, we have infrastructure basically very close to any discovery that has occurred. Simply, the size of the country designates that there are roads and even maybe railroads and rivers close to the deposits. Also, the price of power is, particularly electricity, is quite low, one of the lowest in Europe. Which I'm not too happy with, having been a Minister of Finance 10 years ago, and I was for the liberalizing of the price of electricity, but obviously it's still a social category which the investors also benefit of. So you have electricity on the level of 4.5–5 euro cents per kilowatt. compared to other countries where it's 10 to 15 euro cents per kilowatt. So this is the general environment, which is very conducive. And one thing that I did not put into this slide is also the royalties and the licensing, the tax system, not the licensing, the tax system, which is also very favorable in the sense that, for example, for metals, the royalty, the mining royalty is 5% net smelter value, and the tax is, for example, corporate profit tax is 15%, which is quite low compared to a number of countries, particularly in Europe. So let's move to the next slide. As I said, Serbian government is very favorable, and I have a lot of experience working with the Serbian government for mining companies, and typically Western mining companies, from majors to juniors. They fully understand that mining must be developed by international companies with the capacity, the financial capacity, the knowledge capacity to develop major mines. They're eager that the law is abided. That is a very important message. Whoever works in Serbia must work strictly according to the law. They want the mines to be very safe and that the environment remains safe. So safety standards and environmental protection are essential. And they simply believe, the government believes that developing mining is one of the vital aspects of a quicker development of Serbian economy. Therefore, we have always encountered really a partnership with the Serbian government working for our clients. So when you come to Serbia, what is really you do? You find lawyers, you establish a company, you need a corporate presence in Serbia. It's very simple. You can do it, for example, in 7 days. You find a good geologist, and you know that this is essential. And then you go through the process of obtaining an exploration permit. So you can buy a Serbian company which has an existing permit. You can transfer a permit from a company which already has a permit, or you can apply and obtain a new permit, which is typically given for an 8 years period. It's 3 years plus 3 years plus 2 years. So it's 2 extensions. First term is 3 years, another 3 years, and then 2 years. The maximum size per single field is 100 kilometers, and you get the exploration license. You pay the fee, which is up to about 10,000 euros, and then you just notify the ministry and the municipality that you're starting to work, and the exploration permit is naturally based on your exploration design. So you submit the exploration design to the ministry, and based on that, you get the exploration permit. The law provides that you must fulfill at least 70%, 75% of the planned exploration works as you have described it in the exploration design, which was submitted to the ministry. As in every other country, you must submit annual reports of your results, and then a final report. And if you have good results, which that prove actually that you have a deposit, that you have reserves which are economically viable, then you apply to the ministry to get a certificate of reserves. A certificate of reserves is actually a state certificate where you have to prove to a panel of typically high-geared professors of geology from the Faculty of Geology, who are members of a ministry commission, that you prove to them that you have found reserves. And you must convince them that those reserves are economically viable. Once when you defend your geological reserves studies, you get from the ministry the certificate of reserves. And this certificate actually serves as it is your guarantee that you have the right to obtain a mine permit. And I'll show you how it looks according to the Serbian mining law. So I have talked about the certificate of resources. There is the certificate of resources. When you get that, you apply for the exploitation field permit. In the meantime, you must also develop a feasibility study. Once when you get an exploitation field permit, that means that a certain field has been allocated for developing a mine. And with that, you develop a mine design. And with the mine design and a number of other documents, this is a simplified scheme, but we have, of course, the developed scheme and went through it also in real life. You get the mine building permit, and that is the moment when you start building the mine. You then build the mine, and after that you commission the mine, and that is the moment when you start production. So the Serbian mining law actually is, as I said, quite good, and we know it very well and practice it a lot together with other fields of law which are supporting this procedure. So there are, of course, other aspects which are important to investors. Like, for example, if you come to Serbia, it is important that the home country of your investment is a country which has a good bilateral investment treaty with Serbia, and that treaty has a good arbitration clause in case that there is any issue. That there is not any, but a serious issue occurs that maybe the state harms you in some way which is illegal. We didn't have such a situation in terms of mining yet, but that is something which is important for every investment to come from a country which has a good bilateral investment treaty with the host country. In Serbia, you can easily exchange from dinars into stronger currencies like the euro, the dollar, and the pound. You have typical guarantees for foreign investors. A major project would probably, I would advise, getting a stability agreement in terms of both of taxes and the stability of legislation. So this is something that is from time to time given, but I think that a major mining development should try to procure a stability agreement with the government in the form of an investment agreement in which the stability clause would be probably the most important aspect, giving a really security to a longer term security, for example, 10 to 15 years, having in mind the volatility of all other parameters in a mining project, particularly the prices on the markets. What do we do?
Sorry to interrupt. We'll probably have to wrap up shortly. Do you want to?
I will wrap up in a minute's time.
Okay, no, thank you very much.
Thank you very much. We're a law firm and we're advisors to mining companies. So we do all the permitting and we do it very successfully. We do government affairs for our clients. We, apart from the mining permitting and exploration permitting, we do all other permitting like environmental impact studies, water permits, and so forth, drafting all contracts, buying land and other real estate, getting building permits. So everything that you need regarding a mining project, we will very successfully and with best integrity deliver it to you. We have also a network of law firms who we work with closely, and we can coordinate the efforts in Bosnia, Bulgaria, Greece, Montenegro, North Macedonia, Romania, and Slovakia, and we have done that before. And here are some of our clients, which are major multinational companies, some of which are mining. We work a lot in mining, and there you see, of course, Freeport McMoran. There was Dundee, there was Eldorado Gold, Nevsun, and some other also companies were our clients over the years. And we're very proud to work in such an exciting industry as mining is, and in a country which is really supporting mining greatly. And there is a patriotic aspect to that you do really something important also to your country. So with this, I thank you very much. And if you have any questions, please contact me or ask the questions right now.